Again, we're very excited for this unique event with Alex Bernal, whose topic for today is using COT data to get the edge in commodity trading. Please join Alex and John for an exciting event covering the advantages of Trade COT. I'd like to thank you all again for your attendance today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Alex Bernal of Trade COT.
How's everybody going today? My name is Jonathan Sirkin. I'd just like to say thank you for NinjaTrader offering this great event. I'm proud to offer Alex Bernal of Aether Analytics, who's been a member, who's worked on as a trader in the yield curve trader, and great friend, personal friend of mine. I would love to say that he's going to offer great insight on the market, the COT report, and he has a great view on harmonics and how to basically give a total broad view of how the whole market structure and the COT report works together. Alex, how you doing today?
Great, thanks, John. Good morning, everybody. Hopefully everybody can hear me. With that, I guess I'll just dive right in and get started. The basic premise of today's presentation is really just to briefly go over what the commitment of traders data is, what the COT report is, what the data means, and how I use it as an analyst to help my clients find the edge in commodities trading. So with that, let's just get started. Go to the next slide. So with commitment of traders data, it's really interesting that with all the markets we have, the futures market is one of the only markets that gives you the insights to what the players, the big players, the small players, and the large hedge fund traders are actually doing. So what the commitment of traders report is, it's really a report issued by the CFTC enumerating all the holdings of the participants in the futures markets. Now, these aggregate all the long and short positions of the futures reported and puts them into one solid data report that we can then use. We can use that data to find interesting analysis points to how the markets might be shifting going forward in time. So the COT report again tracks three types of traders: the commercial hedgers, the large speculators, and the small speculators. To touch base on the two, the small speculators and the large speculators, these are basically going to be players that are important to watch, but they're not as important as the commercial hedgers. Small speculators being non-reportable, these are typically retail or considered speculative or dumb money. Large speculators are hedge funds, typically funds that are trading in the direction of the trend or speculating to which any type of spread between different futures markets will widen or tighten. Now, the commercial hedgers, this is the important player to keep in mind because, let me go back one slide, the commercial hedgers actually make a huge part of the commitment of traders data. So the CFTC, they actually consolidate this data from the Tuesday close all the way till Friday, and that's when this data is posted. They present it in a more raw format, and you will see in the indicators that John has developed with at tradecot.com that we can further use this data to find some more interesting viewpoints to how it's going to affect the markets going forward. Now, TradeCOT, I used to have, being a technician, I used to have multiple different software platforms. You know, my basic charting platform, and then I have two or three more that would allow me to access these other tools. I have since moved 90% of all the research work I do to NinjaTrader, and it was kind of a godsend when I found John that had developed the commitment of traders data and indicators that I was using on other platforms for NinjaTrader. So it really helped me consolidate a lot of my work and speed things up because I analyze many markets all day long. So it was great to actually finally get this set up for NinjaTrader. So I want to touch again on the commercials because this is basically the meat of what we were going to discuss today, how to analyze the commercial position. And commercials, I mean the cash market players, the producers, and the consumers of the actual commodity. the reason the commercials are so important to watch is, one, they are considered to be the player that A, knows their market the best. They pretty much live and breathe whatever market they're playing. If they're the oil producers, they know the oil market better than anybody else, assumably. If they're the corn producers, and basically the distributors, they know their markets. They know if the crop's going to be good or bad this season, and they can make the most well-informed decision about their hedging going forward into the next few months. So this is why one of the reasons why we really watch the commercials very, very closely, is that we measure their actions so we can kind of get insights to how the markets might be moving going forward. Now, another part about the commercials that's really important is they are hedgers primarily, so they're actually selling the raw product. And so what they're doing as far as their futures activity is, when prices are going up, they're typically selling, they're hedging against their raw product, and when prices are going down, they're typically buying going against their raw product to lock in these prices. So you'll see in the next couple charts that I'm going to show you that it's somewhat inverted, but if you just get that in your mind real quick, it'll start to make sense. So again, this slide is just to cover those points I just said. And one of the big things I like to remember is the commercials are making up 70 to 80% of the total open interest. That being said, I always like to use the aphorism, you can't turn a battleship on a dime. So this being the biggest chunk of the market, this being the biggest player, when you actually see them positioning themselves for a new trend or a new market direction, it's very important to take notice, because these beginning stages of open interest change can affect the larger term trends going forward, for many, many months forward looking. So this is a basic chart of the TradeCOT.com COT report for NinjaTrader. You can see I've just isolated here the commercial open interest net change analog on the bottom, and I've overlaid it underneath the raw weekly price change of oil. Now I'm using weekly charts here on our presentation, because this, as an analyst, this is where I start my top-down approach with all the commodities that we analyze. So as we're trying to find the smaller trends on the daily time frame to look at execution and patterns, we really are trying to figure out what environment we are for each commodity future, whether or not it's overbought or oversold on the macro, and then we can dig down and use price action and price patterns to confirm a trade into the new trend. But first, it starts with trying to figure out how the commercials are positioned and how the general market is expecting any different type of price change going forward into the future. So this is basically here to show how, let me see if I can get my pen out, my drawing tool. As price goes up, you can see that the opposite is happening here in the commercial data. They're actually hedging, they're selling, they're getting net short here on the price scale, open interest positions. So the key way that I can further take the raw data that gets spit out through these commemorative traders reports is I can make these other sort of indicators or these under indexes to help me figure out where we are based upon the raw data, because just looking at the raw data sometimes can be a little bit elusive as to what it's really telling you. So there's many ways to actually take the raw data and compare it to each other to get useful information for trading and investment purposes of the futures market. So the key index that we're going to talk about here today, and I'll touch base on some of the other ones that are in development by John and for TradeCOT. But the main one that I reference a lot of the time is called the COT index. Now, you could see the equation here. I'm not going to go into it too in depth, but in essence, this indicator basically converts the net futures positions to a normalized scale, because over time we've seen a lot more interest or a lot more total volume into the commodity markets, mainly based upon these ETFs or these other type of holding vehicles that are pushing more volume into the market. So we really want to try to normalize the scale to get a better viewpoint to how the ebb and flow of the commercials open interest is actually affecting the market. So this will basically rank the net positions over the last 3 years. I always say, well, why 3 years? And because 2 years didn't work and 4 years was too much. So we really just kind of found a net medium here with 3 years that works pretty well. So I don't really question why it works for 3 years, but typically it has something to do with the hedging cycle or forward-looking nature of the commercials. They might not, on average, be looking past 3 years for their hedging purposes. So with this, it's basics of any other type of oscillation indicator. A 90% on this indicator typically suggests there has been a commercial buying climax, which means they've gone all in with buying in their open interest position, and then the opposite for if it gets below 10 or 5% typically suggests a commercial selling climax. Now this, I need to put an asterisk because different markets behave differently, and you'll see in some of the charts that I've updated all the commodity markets through yesterday that different markets operate in a different way. So you'll see this indicator actually be an overbought position when the price action is actually oversold, and it might get a little bit tricky, but that's where, learning how to use this data, analyzing it properly, and understanding the keys of what it's telling you is very important if you're going to use this for the macro positioning. Now, I always just like it to, the indicator tells me when the biggest, most influential players are basically all in or they're on one side of the boat. So I'm really expecting the boat to rock over and retrace at least in the macro environment. So with that, let me just show you one basic here chart. This was a couple months ago. This is just basically going to demonstrate what I just said. This is cocoa. Now, cocoa is a very clean example. That's why I wanted to show this. The bottom, which I have a little bit squinched up here, is the actual disaggregated data. We'll go over that in a second, but basically I'm just taking the raw data that we get from the COT report, and I'm making or I'm plotting the COT index, and it makes it a lot more clear to which this data is actually telling me. So you can see this is a good example of showing how this was overbought here at this highs, this was oversold here at these lows, back and forth in the macro. Now for the small daily trader, intraday trader, this information might not matter so much because you're on such a micro time frame, but for those who hold positions or build positions for a lot longer time frames or maybe trade options like I do, this is very, very important, because if we are entering a specific zone or a specific area on a chart that I'm thinking is creating some type of high, like this point in here looked like it was a triple drives high. This is where you get 3 consecutive highs on divergent momentum. That is just the price action. But if I look down and I see that my commercial and my COT index is congruent with saying that they're overbought here, they're all in buying, and a lot of this stuff is losing steam, then I can be a little bit more aggressive in my position sizing or in my entry points, and I can hold this for a lot longer period. So as a portfolio manager and as a technical analyst, these are the key things that I like to show my clients. And I also kind of align this to being fundamentally based, because the commercials, they have the best viewpoint on the fundamentals of this market. So I'm assuming that they're using the best abilities of their logic to position their hedge portfolio towards what they're expecting for the next crop or the next round of the cash commodity going forward. Now, I'll briefly touch on other COT indicators that John is working on and I've seen in the past. One is basically the spread or the rate of change of the difference between the commercials and the large speculators. Now, this is important because some markets, the large speculators actually play a little bit bigger role than they do in other markets. So they might be jockeying for position a little bit more aggressively, and you could see some key volume or open interest changes before you see price change. So this is always an interesting indicator to look at. I also look at the spread and the rate of change between the swap markets and the futures markets. Now, this is an interesting new type of way. Only recently have I really been starting to analyze the swap markets. In the disaggregated COT data, which is offered on Trade COT, we can actually further cut down the commercial and large trader positions into even smaller pieces of the pie to look at the swap markets and some of the other types of traders. Now, the swap markets, for those of you who manage interest rate portfolios, is growing tremendously. This is because basically people can create personalized options to what they think is going to happen in the next couple months. So just like an options market where you have strikes and expiration dates, the swap markets, if you go through a dealer, you can actually create your own expiration date and you can create your own terms of the different strikes and whatnot. So this is becoming more important to me as I'm watching, especially in the interest rate markets, because we're seeing a lot of potential long-term arbitrage trades and expectations as the curve is shifting away from the zero interest or very low interest rate environment. Some of the things that I've personally put some effort into are looking at the cycle analysis. So I do a ton of spectral analysis or cycle analysis along the time axis of different markets, and I've actually applied these techniques to the COT report commercials data and the COT index itself. Now, this is basically giving me better insights to what are the seasonalities of the commercial data, the commercial hedging position, because now that if we can get to, there's the seasonality of any particular market, we can actually expect maybe a couple weeks in advance if the commercials are going to start to shift, and we can further get a little bit more edge in the markets to our positioning. Now, a couple of things we just want to touch back here because we want to be very transparent with what the COT data is and isn't. The COT data is a little bit late, but it is updated every week. The markets also can stay overbought or oversold for very, very long periods of time. And this is going to be good today to touch on because I always liken this to a fundamental shift in the commercial market. You'll see that the index itself and also the commercials can get to an extreme position, and depending on what's happening, whether or not it's a drought or it's a cold snap for different ag markets or any type of geopolitical issue, you can see the commercials go to extreme levels and follow these longer-term trends, which we've actually seen in the last few years in some of these commodity markets. The other thing, too, that's very interesting is the COT report does not account for spreading of positions. Now, this isn't really a huge issue, but for some markets, the spreads are a lot bigger than others. Like in the treasury markets, there's always a lot of long and short positions against each other. So there's speculative positions to the steepening or the flattening of the actual yield curve itself, and these positions can actually get to be pretty big. So one side of it might be looking like it's getting fairly long, but it doesn't account for the other side of the spread trade being fairly short. So you got to keep this in mind for a couple of markets. Mostly treasuries is the only thing that I've seen this be any type of effect. And then you'll see a really interesting anomaly that I've been talking about to my clients and to some of my social media stuff about the natural gas in 2012. So quickly the advantages of the COT. One, it's chartable on NinjaTrader. It's, to my knowledge, the only one that allows you to do this. I've used to have to use a very expensive platform, which I will remain nameless, to get this type of data, or I've actually tried plotting it myself in Excel, which is a waste of time. So also this data, you can use it to develop backtest trading strategies, strategy developer within NinjaTrader. So that's really nice if you want to add other indicators or develop other types of analysis techniques. You can use the raw data yourself to try to further our techniques here for analyzing trade COT caught data. The other indicators that are offered are the disaggregated data. So again, disaggregated into further smaller groups such as the swaps and whatnot. Also the COT index, and the COT weighted index is also important. It's just slightly different calculation, showing basically the net long versus shorts in the commercial data. There's also another indicator we always like to mention, our friend Floyd Upperman. He has his own indicator that is offered through TradeCOT on TradeCOT website as well. So now let's get into it. I really, didn't want to spend too much time on just looking at slides. I really wanted to give you guys something valuable and show you as an analyst what I'm looking at for all the commodity markets here. So I'm going to try to get through all the charts. If you guys have any questions, I guess feel free to stop me at that particular chart, or maybe I can go back to it. But I'm really going to try to go through this thoroughly to what I'm looking at towards the markets as they are setting up now live. So for the first couple examples like this, I just want to show you how I typically look at my commitment of traders report data and analyze the index. So just looking at the Australian features here, this has been really interesting because we've seen a lot of fundamental shifts in the economic data for the Australian economy, and it's really interesting here that we had an overbought position on the COT report, COT index, before we had the huge move down. So some of the points I want to show here are, we get in certain markets, you get these really nice swings from overbought highs when the COT ADA is at the bottom. So again, this is a little bit confusing to some people that first see it, because it's an inverted indicator, or for this market it's inverted. So typically the COT index is overbought near the lows and it's oversold near the highs. You can see very clearly that every time we've got below 10% on the COT index, it was very close to illuminating a very important macro high, which again we would go to our daily charts to actually execute trades on going forward for these markets. So you could see here the black lines I've highlighted. These have been really interesting pivot points here on the weekly going forward. Now we were riding this overbought, and one of the things that I notice as an analyst is when you ride, it's like a pendulum. When you ride an overbought condition for some time, you get an equally equally strong move back towards the other end. So markets, they ebb and flow, and when you kind of force them to one side of the equation, one thing is interesting is that there's a core fundamental shift in the forward-looking expectations of the commercial data, and then also they can get to very extremes of that positioning, and then we see the opposite move come back. So right here, I always like to highlight the points that I think are what I call the fundamental shifts. And this is the trickiest part, because as we see these overbought positions within the larger term trends, this is where drilling down and using your abilities as a trader to find price action that will confirm reversals is very, very important. Because as you can see, and you'll see in definitely a few slides going forward, that these trends can persist for some time, especially because we're looking at a weekly pattern. So again, it's a little hard to see the symbol, so I'll do my best here, but I believe this is the yen. So this is another interesting viewpoint. We've had some market intervention with the yen currency, and so we've had this big sell-off, as everybody's probably aware of, this whole year in the yen, and we've been riding this oversold. Now, this doesn't mean we're blindly buying the market, but we're definitely looking for some type of base pattern or some type of near-term pattern to trade back to the upside on the short term. To be honest, I think there's a lot of issues going on in the bond market over there, so I'm almost expecting this type of oversold commercial net positioning to persist for some time. But you can see here, this also was very good at illuminating the highs and lows using the COT index. Now, there's another indicator that is under development by John, and this is hopefully going to help to serve as a catalyst point to when we can get into the markets and when we can get out. Now, it's still under development, but in essence, it's going to show the it's going to be very sensitive to the rate of change of the commercials positioning, because volume typically always precedes price, in my point of view. So if we see that the commercials are shifting themselves in the opposite direction, then it could be a great trigger or catalyst to helping us enter profitable trades. So this is a euro currency, and the interesting thing about the euro currency right now is it's kind of in no man's land. So what I do is I actually then drill down and put priority on my price charts. I'm expecting here, you could see I have this Gartley pattern setting up on the weekly as a potential ABC before we head down, and hopefully this will push up into the this way. See, even I get messed up, overbought territory, and then we'll be a little bit more confident about the ability for the commercials to re-push the market back down towards lower prices. This is a Canadian dollar. Now, this is one that's actually setting up right now, and we played this through the Aussie CAD, and you can see that I'm using price action to confirm a trade in the environment, in the area of a potential oversold COT index, or an area where I can be fairly confident that the commercials are going to start pushing the price back higher. So when I get this really great pattern that I trade off of, which looks like it's a bullish bat pattern, I'm waiting for the Canadian dollar to actually confirm new highs, swing highs on this trend line here, but I know it's coming off a very extreme point of the commercials positioning, so my expectations for this next trade is going to be much, much higher prices, and I can kind of use that information to basically create trades, especially if I'm using options, that might be a little bit more longer dated, or I can use expectations to expirations with concern to my credit spreads that I might be selling. So if I'm selling put spreads, I might be more inclined to give it a little bit more time to expiration, get a little more juice out of it, because I know that the next trend is going to potentially persist for some time as this moves back down to the overbought area. So, this macro viewpoint would be quite bullish for the Canadian dollar futures going forward. I think this is the British pound. So you can see again, like the euro, we were coming off some very easy to see double top on overbought. So if I get this type of setup, this double top, and both tops are pushing into the overbought, this was a really great setup we had last year. It also aligned with the seasonalities going forward. Now we also have this double bottom here, so it's basically doing a mirror of what it did the last time around, and it's pushing in this oversold the last two highs. So if it breaks this this horizontal trend line, we can expect it to make the measured move up to the 164 target. So again, using the oscillator, the COT index, to help my expectations on whether or not this trade's going to bust through is something we do quite often. Now you can see that in the very bottom panel, this is the raw data, and I typically bold the commercials because as I'm going through these charts pretty fast, I just want to keep my eye on the commercial line, and I don't personally focus too much on the small speculator and on the large speculator. But you could see that the large speculator often acts in opposite to the commercials because they are shorting against basically the price action. When it's going down, they're typically net short. If it's going up, they're typically net long. Typically, not all the time. Next one is NASDAQ. Everybody's been kind of focusing on the equity markets here. Are we at a top? Are we overbought? And to be honest, one key thing here to look at in using commemorative traders data is not all equity futures are the same. I don't know if you guys have ever traded E-mini spreads or equity arbitrage spreads, but one of the things that I've noticed in my past is there's so many different spreads trading against the E-mini, one as hedges and also as arbitrage trades, that we don't often get very good viewpoints to the COT data for the E-mini. Now this is why I actually look at the other equity markets, because I can be fairly assured that there's less speculative spreading going on. We can get a better viewpoint to how these are shaping up. So this is the NASDAQ futures, and you can see very clearly the last couple times we got this overbought condition, we did form a major high. And so right now, this is as of I think a couple days ago, we had this crab pattern in here, which is a bearish pattern. It's a little bit hard to see. You can see my box up there. And then it's also aligning with an overbought condition in the COT index. So I think the NASDAQ is a very interesting potential short position here on the near term if you're expecting a new sort of bear swing to happen. Now, I've highlighted some of these other arrows in here in blue to remind me that these are actually interesting points where the market didn't pull back off an overbought or oversold. So, you know, just to make sure you guys understand that this is not a holy grail system, and there is pretty much no holy grail system that I've actually seen. You know, there are points where this type of analysis is fallible, but as we look at the raw data, we can kind of see what's actually happening here. So the hedgers were expecting this to break down this area here. They were expecting it to go here, and as it tripped the pivot here, they had to quickly re-establish a new short position in the commercial sense, and so that's how it slingshot the market back up into this zone here. So it's very different than where we are now, because if we were positioning ourselves for a fear-based, we're expecting more move down, I would expect the commercials to actually be going net long here in expectations of further move down. So with that being said, my forecast here is that we get a nice pullback, and then we'll see this move back towards the 50 zone, and then we'll shift back and go towards new highs into the end of the year. So this is a comparison to the E-mini here on the weekly. You could see that the COT data is a little bit more indecisive and a little bit slower moving. But we have been persisting in this overbought area for quite some time. So we're watching a lot of these regression channels and these trend lines here going back to this pivot, especially because if we're using the COPSI Elliott wave model, we do have a 5-wave sequence complete. So that's definitely something we're looking at as potential risk going forward in the NASDAQ and E-mini futures. Now, I remember I didn't put a lot of these in order, so you have to bear with me if I jump back and forth between different markets. This is platinum. So again, you'll see also in the gold and silvers, we saw a huge shift in the commercial positioning, and it didn't get as extreme in the platinum weekly chart as it did in the gold or maybe silver. So you could see that these extreme positionings in the COT index have been pretty spot on as far as on the weekly panel for potential highs and lows. This one being a really great trade here, as if you would have caught this high, this was a huge move down. You also got this double top here at overbought levels. The next one is wheat. So you can see here, wheat was fairly well behaved back in 2010. Every time it did get in this oversold area, we had a nice little pop. You had a 3 drives bottom here, so I won't draw it all out, but this was basically 3 consecutive lows on declining or decreasing momentum. We crossed this trend line, and then up we went. This also re-swung back to the overbought positioning. And as you saw, these tops were also cleanly shown here on the Commitment of Traders Index. Now, I'm only focusing on the COT index itself. There are other indicators that you can overlay on this to confirm or disconfirm all of the viewpoints together. I typically use the COT index primarily, and then I'll throw on the other ones if I'm getting a little bit confused what's going on, or if it's a particular market that I think that the commercials are making a fundamental shift type move. So you can see here that this has been very good here in the wheat market with showing this, are we closer to a bottom or are we closer to a top? So we've been very close to this potential oversold region. We're sitting right here on this pivot zone, and we've been ranging out. So if wheat breaks up above this range, we'd be fairly confident that this will make an extension here back towards the 850 or 900 area. If we can't hold this, we can still get a little bit more oversold. So a little bit cautious here, at least in the wheat going forward. This, I believe, is the soybeans. So the soybeans was very interesting to watch last year because we made these huge top extensions of these huge fundamental shift runs in the Commitment Traders data. You can see the lows were pretty good back here in 2010, right before the big bull market in 2011, where we had a sustained basically pegged to the floor in the COT index, showing that the commercials had to shift their positions quite drastically. And then as we ranged out, we could have caught one high here, and then this was actually pretty interesting setup where we had a wave 1, wave 2, wave 3, wave 4, wave 5. Very clean Elliott wave complete sequence. So now that we're looking at the macro, looking for some type of 3-wave sequence down. So using price action and other types of techniques in combination with the weekly Commitment of Traders report has been very powerful for me, and it's just one piece of the puzzle. So this is oats. You can see here how the COT index has fared over the last couple years. And we are kind of stuck in here in the middle. Now, if you guys want me to stop on any chart, I could go back. If you trade any particular chart, just let me know. I can expand on it a little bit. But I just wanted to really give you a full comprehensive viewpoint to all the commodity markets and how I'm viewing them. And also how the COT data, or just the COT index, has helped illuminate these potential turning points in the long term. So this one looks like it was really big. I'm not quite sure what market it is. I think I left that on the slide. Now this is the silver market. I have not gone over corn yet. I will get there. I know it's closer to the back. Well, you could get the study, I believe, but it won't be very useful because you have to get the COT data. Now you can get this data from John's website, tradecot.com. I will leave it to John at the end of the slides to speak to the indicator and how you can get the data in NinjaTrader. Right now, I'm just kind of going over how I'm using this for my analysis and my trading. So this is also a very important chart that I wanted to touch to, which was the silver and gold charts. I've noticed after analyzing gold and silver for a long time that silver typically leads the next bull runs in the metals reversal moves to the upside. So as we're all kind of trying to look for potential bottoming patterns or bottoms here in the metals markets, I'm keeping my eye more on silver because I know if silver actually gets a grip here and starts to rally to the upside, we could see the other metals potentially hold and rally going forward. Now the white metals, palladium and platinum, have been holding up a little bit better than gold and silver here in the last downswing, and so I think if silver catches a fire, it could be really interesting going into maybe next year or the year after. So you can see here that the COT index caught pretty well these two lows here, and this low got overbought here. So if you're just looking at a chart and you're saying, well, this doesn't look overbought, well, only the COT reports were really telling us that the commercials had shifted quite aggressively their positions, and so this was a good short right here at this 34 level, pushing up against resistance. Now we've actually swung back to the opposite extreme where we're oversold here, and so personally I'm looking for some type of potential trend line break of this overall wedging pattern here on the macro, and then maybe some trend line breaks or some reversal patterns to confirm back here to the upside in the silver market. I have not gone over the 10 years yet. I will get there. I literally did all the commodities, so I'm trying to just get through them a little bit faster. This is sugar. Sugar's been kind of riding this downward wedge here for quite some time. So to me, when you see these apexes or these really confused points in the COT data, to me this means that the market is really indecisive. They're really waiting for some type of fundamental shift or some type of seasonal shift to push off into a new direction. I'm actually leaning more towards the upside here in the sugar markets. I really think that this elongated bear move is coming to an end. I've also done a lot of GAN studies off of these pivot lows here, and we are reaching one, I think, closer towards the end of the year where we could see some GAN confluence with time and price. This is gasoline, RBOB. Just quickly let you guys look at check out this chart if there's any more questions. This is palladium. This is the natural gas. So natural gas is one of those markets that is a little bit more tricky to analyze using the commitment of traders data. One thing that I've noticed is that makes it tricky is the commercials are actually and have been net long the contracts. So they've been, to me, expecting further decrease or elongated decrease in the price of natural gas. This move here was very, very, very interesting to me because you had this huge blow-off top in natural gas as the commercials were actually buying. So they're typically hedging in other markets. They're selling when the price is going up, and the commercials were actually buying this up. So there was this weird anomaly where I actually saw this huge up push, and I think this is what caused such a huge downswing. Is this massive, looks like overnight or over a couple days, commercial shift to changing their net long position. Now this is also important. We've been making this swing high here in natural gas as the COT index was pushing and overbought. Now, does this mean that we're going to keep pushing back down through $3 or $2? I hopefully put the daily chart in here because I definitely have a trade on here. I'm not quite sure. I really think this is a fundamental potential shift here in the commercials, as they're riding a almost net short. So if these guys start going net short, you could see the price of natural gas start to shoot up again. But for right now, you're seeing the beginnings of a total fundamental repositioning here in the natural gas. Also, you could see that if we go in here, there was a nice 5-wave sequence to the upside. I think this is a wave 1. This is a wave 2. And now we have the middle of a wave 3, and we're looking at the potential B, or 2 of 3, excuse me. And then I'm actually expecting us to go higher. Oh, I think this is lean hogs, or... Now, like I wanted to touch base, how do I day trade with COT? To be honest, I don't day trade with COT. This is more for macroeconomic or macro positioning on the longer scale. Now, if you get into a day trade, you can actually understand that you are in a market where the commercials or the big volume is going to be either more aggressive buying or selling over the next few weeks. That could potentially help your position sizing or your expectations for the volume coming in on the day trade. And I've actually, even though it's not advised, I've turned a couple day trades that were profitable that started to run into long-term position trades based upon the COT positioning in the longer term. So I think this is the lumber. You can see we have a cipher pattern here. This, I think, is coffee. This is also very similar to sugar, where we've had this elongated riding of the oversold. Excuse my chart for being so blown in. This is the HG futures. You can see we have this bullish butterfly pattern here in copper as we are hitting an oversold. So this is very positive, looking forward for the price of copper. We're getting price action, and we're getting the commercials on our side. It's more of a wind at your back method, because if you know that the big boys, the big, huge players in the space are going to be working with you and instead of against you, you could be more confident in your holding positions and in your position sizing. This is the HE. See, this one was fairly clean in the last couple years. We have our GF futures here. Try to get to some more, some more markets people trade. The gold has been really interesting. One, because if we start back here, this was a very emotional time. I remember this was also the proposed end of the bull market in gold. And if you looked at the Commitment of Traders report, it was actually a very good time to actually accumulate potential gold positions. And then all the way up, we had these overbought extremes near the potential highs. But basically, this was the point of the commercial extreme going forward into this big of a move to the upside. So you can see that this marked the high, and now we're building more of a base. You could see that we've swung down and we've seen these extremes on the low of the COT index. The commercials have basically shown us that they're still supporting the markets here at these levels. Now, to touch base on the raw data, you don't really get this information by just looking at the raw data. So that's why using the further calculations of the COT index and other indicators are so important to me, is to try to get to a better viewpoint. Now we've been pushing a 99%, so we're very, very deep oversold to the COT positioning on gold markets here. So again, like with the silver, I'm watching for some potential reversal patterns. There is a harmonic in here if you trade harmonic patterns. You can see if I start from this pivot, this is actually a potential harmonic pattern that is bullish to the upside for gold. This is the DX. So the DX was a great trade here in the last couple days. I typically do a market recap video every Sunday. I didn't do it last week because I was a little busy, but this was a very, very textbook setup of what we look at for some of our futures trading clients. We were getting these overbought signals here on the COT index, and we also had a, I think it was a 97% butterfly pattern here, pushing into a recent high. So this was a great place to actually short US dollar pairs, and we had price action pattern congruent with our COT index. So this was a great example of how to use the COT data and price action to confirm a nice macro trade. This is cotton. Cotton was also a very good trade here for the last couple weeks. We saw we moved off the oversold, and we're looking at this as an ABC going forward to the upside. CL, I'm just going to go through these quickly so we can get to some of these other charts that were requested. It doesn't look like I forgot to put treasuries. If you send me your, if you tweet at me, I will send you a chart of the treasuries, and my Twitter is @InterestRateArb, so I won't forget you guys. So with that, I'm going to try to wrap things up and leave it open to questioning. Let me hand it off to John here so we can talk a little bit more about his indicators and how you can get this for NinjaTrader.
Thank you, Alex, for that. It was great, very insightful. Actually, I learned stuff just from watching you as well. So, yeah, just to go over the indicator from TradeCOT.com. Just like say thank you again, real quick though, to Alex Bernal for presenting, and NinjaTrader for hosting such a wonderful platform and all these webinars that give people ways to learn things, new things out there. So, just like to go over things real quick. Yeah, the data is free through Kinetic for end of day to actually get the data to power your charts. The COT data is a paid service I offer, so you can actually chart it on your platform. Yes, this will actually be uploaded to YouTube channel. I'm not sure the time frame when they do upload it, but they will go over and they will be uploading it back up to YouTube because I've seen it before. From that, the indicators we do have coming out, we do have a couple indicators for triggers coming out on this. We're in development for a seasonality indicator. We're also in development for a rate of change on the COT index as well in development in the pipeline. That's all. Those are all going to be either, we haven't decided yet whether or not how it's going to be, how the pricing on it is. But those are just future projects right now we're currently working on. If you guys have any other questions, please ask. We'll be happy to help you out. We have roughly a couple minutes here left. But the trade COT, basically my approach to building an indicator was not to try and build an indicator that would charge a lot of money for the basic service you want. Like everybody else, 1 second. Okay, so like everything else, I try to approach this as financially responsible because I know it's a weekly data. It's a top-down approach. I use it as actually a top-down approach in my trading. I use it as basically an analysis tool so I can find out whether or not, I want to be in the bigger picture time frame. I want to be looking at where I want to be in the position. So if you do happen to have a good trade on and where you're positioning, you can however your trading methodology, if you're doing intraday swinging or day trading, to find your entries and find your basically your directions. But again, if we have anybody who has any more questions, I guess we'll just hand it back over to Wesley and just tell him thank you for a great webinar. And to Alex again, if you know, check out aetheranalytics.com and interest rate. It's at interest rate arb for his Twitter account. Thank Wesley, you there?
Yes, I am, John.
Oh, cool. Thank you. Well, that is what we're Erwin, to answer your question, that's what the we have a trigger we're developing right now for the COT index or the COT report, so you can have a time when you should be looking for triggers and entries. That's in the pipeline right now for us. Sorry, go ahead, Wesley.
All right, thanks so much, John, and would like to give a special thank you as well to Alex and to Trade COT for a great presentation today. NinjaTrader is pleased to sponsor these weekly partner events as a value-added service for our clients. So if you do find value in these events, we hope you will attend them on a regular basis. Now, you may all stay logged into the room for the NinjaTrader Charting Level 1 and Chart Trader event that will begin at 12 noon Eastern today. Again, we do appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at NinjaTrader.